now to talk more about it is Robert Profusek, Global Chair of M&A Practice at Jones Day. The bigger issue here, Bob, though, is we're starting to see deal flow start to happen, aren't we?
Yeah, it's much more active than it's been.
All of a sudden, too. It's really picked up over the last couple of weeks.
Yeah, it really picked up for us, the people in the trenches, believe it or not, in August. In July, I thought Manhattan was almost dead. I get a cab at 3rd Avenue at 4 o'clock in the afternoon. What's that all about? But in August, clients started to call up. I think really it followed sort of a level of assurance that the equity markets were going back up and probably not going to have some big reversal.
All right. So what's the outlook from here? Because we're definitely seeing, deals in a smattering of sectors. You expect it to continue?
Yeah, if you look at things historically, whenever there's been a severe and rapid market correction, it's been followed by a major uptick in M&A, and particularly in hostile M&A. That's really quite common.
Like what's going on with Kraft and Cadbury right now.
That's exactly right. And, it just stands to reason. If people think the prices are going to go up, they start to think we better move now. It's harder to go through an elaborate courtship. If you really think that things are going to go up, you have your financing lined up, you're going to go.
Now, at the beginning of the year, it seemed like healthcare was the big sector for M&A. Now it looks like consumer products are really the hot place to be. Is that for any particular reason? I mean, why do we see everything going on all of a sudden around Cadbury? Talk about Colgate-Palmolive just now, Reckitt Benckiser.
Benckiser, right. Consumer products are always part of the game. I think there's actually going to be a lot more action in really industries that are tied into what's going on a macro level. Infrastructure, energy, healthcare is still, that's going to play out some more. But, consumer products, there's always a level of that going on because valuations are easier. Financing's usually available because it's not so volatile.
With this Kraft, Cadbury, Hershey, trifecta, Ferraro, actually 4 players here, I mean, how do you think this one's going to play out?
Way too early to know for sure. One thing that...
Way too early?
Oh, yeah. The shareholder base has turned at Cadbury. This whole process, I think, not surprisingly, was designed to make sure that the shareholders turned over to a group that would be in favor of selling the company. The rules are different over in the UK than they are here. And so it's not quite a foregone conclusion, but the probability of the company staying independent, I'd say, is very, very small.
What do you think about the price? I mean, I don't want to put you on the spot here, but we're seeing $16 billion, $17 billion. Do you think it's going to go much higher?
It depends on how many people get involved in it. It's a very important asset, stability, easy to finance, all the rest of it. And if other people get involved, you can expect the price to go up.
All right. Bob, thanks so much for joining us. Bob Profusek here at Jones Day, M&A Practice Global Head.